Alright, a lot of us are still stunned with what happened not too long ago. The crypto market just went through one of the biggest wipeouts of all time. In less than an hour, over $300 billion vanished from the total market cap. Bitcoin crashed from 126,000 all the way down to the $100,000 area before rebounding slightly. That's around a 17% drop in a day. Percentage-wise, it's nothing compared to the pullbacks we saw in previous runs, but in terms of dollar value, it was easily one of the largest mass liquidation events in crypto history. Not only for Ethereum, Solana, BNB, and XRP, but pretty much all of the large to mid-cap altcoins across the board, they all felt this one. So let's break down what might have triggered it, what went wrong, and where things could go from here. But there's one problem. I noticed only 20% of you are subscribed with bell notifications on. So if you want to catch my videos before the rest of the crowd, then I highly suggest you subscribe and turn on notifications. Now, first of all, at first glance, it looks like the main spark was President Trump announcing a 100% tariff on Chinese imports, targeting things like EV parts, semiconductors, and minerals that could be used in crypto mining hardware. That single announcement instantly gave us some serious PTSD. It reignited trade war fears, and investors started thinking that this is the time to move away from risk assets as soon as possible. I mean, just look at how gold is ripping through all-time highs. Then things quickly got worse with the cascade of liquidations. Once Bitcoin broke its 120k support range, margin calls started firing off. Hyperliquid reported over 6,300 different wallets on their platform were completely taken out from the crash. That's when market makers pulled liquidity from altcoin pairs, leaving small caps to crash even harder. By the time the dust settled, speculators say a total of $19 billion was wiped out from the markets. Now, that's brazy blood. And even then, some people shorting still didn't make any money. But regardless of whether you longed or shorted the market here, it's more important than ever to have an exchange that can actually keep up. And I just partnered up with BTCC to bring the FireHustle community a killer offer. They're officially licensed in the US, Canada, Europe, and more, and they don't need a VPN or KYC. You've probably heard me say this, but it's good to have multiple exchanges under your belt, especially because each of them has their own bonuses, and you can definitely take advantage of those. With the link down below, you'll get a 10% deposit bonus and up to $10,000 in rewards. And not only that, but I'm planning on building trading guides, portfolio spreadsheets, and more for those who sign up and make a deposit with my link in the description down below. So check out BTCC while the offer is still up and let me know what you guys think of it. Now, here's where the market crash story gets really interesting. See, a lot of us on Twitter are simply not falling for the idea that a tariff announcement caused all of this. That's where some crazy theories started to drop. And for one, new reports claim that the October 11 liquidation event may have actually been far worse than official numbers show. One catalyst thinks the real liquidation numbers could have reached $400 billion, nearly 20 times higher than the reported figures. Now, let me explain. Binance's API conveniently throttled from the heavy load during this wipeout. And because of that, it may have only displayed about 5% of total liquidations during the crash. From CoinGlass data, Binance's reporting was capped at just 1 order per second. Not to mention, CoinGlass even went down during this time. But this all ties back to the theory that this was a coordinated market attack with some serious manipulation involved. First, we saw the depegging of some of Binance's largest stablecoins like USDE, Wrapped, Beacon ETH, and Binance Stake Sol, which dropped way below their dollar value. These coins were used as collateral for leveraged trading, so when the prices tanked, it made it a lot easier for traders to hit their liquidation range. Now, the problem came from Binance's own pricing system. So since it relied on internal spot data, those tokens dropped faster on Binance than on other exchanges, making the liquidations even worse. Big players who were trying to hedge their exposure still got wiped out. And here's where it gets crazier. According to on-chain data, some new wallets over on Hyperliquid opened up shorts just minutes before Trump's tariff announcement tweet and cashed out hundreds of millions in profit, making it look like there was some criminal level insider trading being done by someone in the government or even someone in the Trump family. Many pointed to Barron as the criminal mastermind behind the shorts, but nobody knows for sure. But in better news, now that some time has passed, it seems like Trump has explained his tariff threats and said that he is willing to negotiate with China. And that's most likely going to happen at the upcoming APEC summit. But Trump has been on and off about whether or not this is going to follow through and actually meet with Jinping at this event. That's where we saw things start to recover fast once the tariff news dried up, with tons of large caps like Bitunix making green candle after green candle. Still, the damage to crypto sentiment had already been done. Now, looking at Bitcoin dominance, it shot up to 62% and is now hovering at around 59%. It's clear that investors are still not ready to dive back into riskier assets. And meanwhile, the Total 3, which tracks all altcoins excluding Bitcoin and Ethereum, fell from its all-time high of $1.17 trillion all the way to under $1 billion in the same month. Now, it's back up to around 1.05 trillion, but it still has some ways to go before we can see new highs begin to form. Zooming into the Bitcoin charts, Bitcoin is currently sitting at around $113,000, testing support near $110,000, which has acted as a key demand zone multiple times since early September. Now, to think about it simply, tons of leverage traders see a good long opportunity after crashes like this one, and so they'll place their longs, and the liquidations level from those longs create the next support range. If all that nerd speak is too much for you, well, I have just a solution. Introducing the FireHustle VIP Discord. Our team is dropping some serious TA, trades, market updates, and early gem plays here 24/7. And here's the crazy thing. This crash had pretty much everyone panicking and losing money. But if you look at some of the plays we had been calling for months in the FireHustle Discord, you'll see that these were some of the few picks that barely budged during the market crash. I'm talking about plays like Zera, Karma, Polyswipe, and a few more. The Discord is where I spend hours every single day fully immersed in crypto research. My team and I are constantly out there finding the biggest trends, doing technical analysis, and sharing everything with you before it hits the mainstream. So if you're interested in joining, then check out wap.com/firehustle. Link will be in the description down below. So to wrap things up, this was a bad liquidity shock, but not the end of the bull cycle. If you look at the numbers, whales are buying, ETF demands are still strong, and long-term holders haven't flinched. In fact, Bitcoin is still well within its uptrend pattern over the multi-year time frame. It's the same pattern we saw in 2017 and 2021. Leverage traders get wiped out. The market resets and smart money accumulates, ready to pump things up for the next leg of the run. The bigger takeaway here is about risk management. Exchanges still rely heavily on internal pricing and collateral that can be easily manipulated. We saw this with Binance, and we'll likely see them keep playing these same games. So if you're playing with leverage, you seriously need to know what you're doing, or at least be in a group where others know better. So where do you go from here? Well, we have Polymarket odds showing that the government shutdown will most likely still drag on for some time, and that could mean that ETF approvals will be on hold for the time being. We had the Solana ETF ready to be approved, which should have been a huge boost to the ecosystem. We just saw 21 shares file the final paperwork before the ETF goes live, so who knows, maybe we'll see that soon. But for now, we just have to wait. On the bright side, it's likely we'll be seeing more rate cuts as we go into the end of the year, which should help ease the tension for some investors. For now, we just need to keep a finger on the pulse and watch carefully to see what comes next. And remember, none of this is financial advice. Always do your own research before making any investment decisions. If you want to go deeper with real-time setups, watch lists, and strategy breakdowns, then come and join me in the FireHustle VIP Discord. The link is in the description down below. And if you want more videos like this, then make sure you hit that like button and subscribe to the channel. Thanks for watching, and I'll see you in the next one.